Taiwan Semiconductor, ticker symbol TSM, is down 30% year to date, but still has a market cap of $442 billion, a PE of 18, and a dividend yield of 2%. With partnerships with big businesses like Apple and Qualcomm and huge demand for their products as more and more goods require better and more efficient chips. So why is this stock down so much? And is this the value investment we've been waiting for? Stick around to find out as we'll be talking about that and more on today's episode. How's it going? Welcome to Everything Investing. Hope you're having a great day. Today we're going to analyze TSM's business and earnings results. We'll start with a full analysis of the financials, the top line, the bottom line, the balance sheet, the cash flows. Very strong over here with TSM. And finally, we'll conclude with an evaluation of this business using our intrinsic value calculator, which will identify whether TSM is a value investment or not. And if you enjoy the analysis and the value investing perspective, please like and consider subscribing for more of this content. As always, we will be analyzing this business in 5 minutes, so let's jump into it. So TSM here, a huge chip maker here. Obviously, their focus right now is on building smaller and more efficient chips. Their second quarter business was supported by high performance computing, Internet of Things, and automotive related demand. And for the third quarter of 2022, they expect their business to be supported by continued demand for the industry leading 5 nanometer and 7 nanometer technologies. Essentially, these are their smallest chips that they currently have in production, and with chips, the smaller the better. So they're one of the only businesses in the world that can actually produce at a mass rate, which is a huge reason why there is so much demand for TSM, and why you'll see in a second their financials look the way they do. Now let's take a look at the comprehensive statement of income here. Just before we jump into these numbers here, what you'll see is that these numbers here are denoted, unless otherwise stated, in new Taiwan dollars. So we'll have to do a little bit of a conversion, which they actually do provide us with here. But nevertheless, let's jump into the numbers here. $18.1 billion US translates to about 534 billion NT. This translates to a 3.4% increase in revenues year over year. And actually, if we look at this from a quarter over quarter perspective, they actually grew 36% in revenues since second quarter 2021. Now, with second quarter 2021, you'll see this across the board here. We're going to see a lot of great results here, but that's primarily because the first quarter of 2022 actually wasn't that great for TSM. So that's why we're more focused on comparing these numbers to the second quarter of 2021. All right, so when they deduct for some costs, we have gross margin here of 59%, extremely strong. Deduct for our operating expenses, we're left with operating margin still of 50%. Again, this is very strong numbers here. And then once we deduct for our other expenses and whatnot, we're left with 237 billion new Taiwan dollars, and it equates to about an 8 billion USD figure here in earnings. That translates to a $9 figure here for earnings per share, but when we convert this to USD, it's about 30 cents for the quarter. So keep this in mind when we get to our calculator later on in the video, but they did come out with about 40% return on equity as well. So whenever you see that with a business, that's always a great sign. And also it has been increasing year over year, quarter over quarter. So that's good as well. Now, if you want to look at the revenue breakdown by technology, as you can see, 7nm and 5nm equate to about 50% of the revenue. And as you can see, the 7nm chips bring in about 100 million new Taiwan dollars every single quarter. And then when we add on the production of the 5nm chips as well onto that, we can see why we've seen some nice growth here. And then once we get into the 3nm chips and whatnot, there'll be even more growth on top of that. And then when we look at this by platform, we can see majority of the revenue comes from smartphones and high performance computing. They've also seen some strong demand, not only in those two things, but also in automotive demand here. As I'm sure you know, we're progressing into EV cars as well. That's going to require more chips, better chips, and TSM is planning to massively benefit from this, as you can see here, with 14% growth quarter over quarter alone. Now let's jump into the balance sheet here. Again, denoted in new Taiwan dollars. We have cash and cash equivalents here of $1.4 trillion and long-term debts of 757 billion new Taiwan dollars. So altogether, that gives us a current ratio of about 2.3 and represents a fantastic balance sheet here for TSM. So this means they have a strong net cash position and is definitely a contributing factor to the investment thesis here. Now let's jump into the statement of cash flows. And what we can see here is that they have cash from operating activities of about $340 billion. Deduct our capex here of $217 billion. We're left with a free cash flow figure here of $121 billion. What do they do to reward shareholders? Well, they're paying out a dividend here of $71 billion. They're also paying down some of their debt here of $26 billion. All right, so what you're seeing here from TSM is that they have a very strong financial fortitude here. And this is kind of exactly what you'd want to see from a potential investment, but it kind of leaves questions as to whether this demand for their chips is going to continue, or if competition is really going to to step up here, especially with businesses like AMD and even Intel that have heavy investments into the production of chips for the future. So we really have to see what can be done here. So before we jump into our calculator here, let's take a look at what analysts are projecting we can do here for TSM. And as you can see, earnings per share figures have grown year over year, all the way up to 114. Now these figures here again are in new Taiwan dollars, so we'll have to do a conversion, but analysts are projecting that by the end of the year of 2022 we'll be at 168, and by the end of 2026, just 4 years from now, we're going to be almost double that. So if we take that $170 figure here divided by the exchange rate here of about 29.4, we can estimate that by the end of 2022 we'll have about $5.80 in earnings per share USD. Now I'm going to be a little more conservative. I'm only going to put in $5 into this calculator to account for any errors that might come up. We expect a required return of 10%. They do pay a dividend. So if we agree with analysts that they can grow at about 15% for the next 5 years, and then let's say actually that it'll just continue at 15% for the next 10 years on a 20 PE, the stock could be worth $214. The stock is currently worth $90 per share. So that's more than a double from where we currently are right now. If we're being optimistic about this, let's say, yeah, they can start to grow. There's more demand. The competition can't keep up with their production. And let's say they can grow at 25%. Then this drops down to about 15% on a 25 PE. The stock can be sitting at $375 per share. Now, let's assume the worst case scenario where competition comes in. Maybe there's a serious supply shock, whatever the case may be. Let's say they can only grow at 5%. And then Intel's huge investments really take over here in the later half of the decade. They take up all the market share and they stop growing TSM's business. On a 15 PE, the stock would be worth $77 per share. Again, the stock price is $90 per share. So that's even in the worst case scenario here. We are not far off. And again, this is a very unrealistic scenario as well, right? So if we increase this to 5% here, again, we're already at fair value here for a margin of safety investment with TSM. Again, if we look at our 5-year earnings per share growth rate here, they are growing at an average of 12.3%. Again, they have a PE ratio of 18, which isn't cheap, but it isn't expensive either. A price to sales ratio of 7 and a price to book ratio of 6. So in my eyes, TSM actually looks pretty attractive here at these valuations. And I'm actually considering starting a position here with TSM. I do want to do some more due diligence here when it comes to the competition in this space. Something else to know about chip makers is that this is a cyclical industry. So you will see periods where there isn't much growth, and then you're going to see periods where there's some massive growth. And right now, while we're suppressed at these levels here, we're coming off the back of a huge increase just from March 2020, where we increased about 215%. Now we're only down, 26%, let's say, from those highs. So there is a potential here that we could see lower prices. But again, based on our calculations, the stock shouldn't get much lower than it is. They have amazing fundamentals on the top, bottom line, and their cash flows, their balance sheet, all of it. It looks very good and attractive and exactly what you want to see from an investment. I think one of the other risks that comes with Taiwan Semiconductors is that it is in Taiwan. It's very hard to estimate what exactly is going to happen over the next few years here with Taiwan, China, the US, etc., as there's a lot of political issues there. But if you're interested in investing in TSM, please do your own due diligence and make sure this is the right investment for you. With that, that's the analysis here for TSM's Q2 earnings results. If you enjoyed the video, please leave a like and subscribe, and I'll catch you on the next one.